All right, all right, all right. Happy Friday and Happy New Year. So, welcome to Ask the Trader. I will be your host today, Joel Harrison. I hope that everyone's been having a okay year. We didn't get the Christmas rally that we wanted, and I guess that's 2 years in a row. So 3 years, three times a charm. So hopefully next Christmas we would get the rally that we normally see over the last decade. All right, so waiting for a couple of more people to join, but this is Ask the Trader. What I want you guys to do before I even get started, go into the comment section and go ahead and leave me a stock that you want me to analyze. So I am a full-time day trader. Let me go ahead and put that on. I am a full-time day trader. I am a full-time day trader. I am an expert in stocks, options, futures, and cryptocurrency. I have over 10 years and over 25,000 hours of experience. And anything that we talk about today are the opinions of Joel Harrison. So I'm going to keep the rants down. I'm fasting right now, so I don't have a lot of energy today. So I plan to look at every single person's stock. But what I would like for you to do is go into the comment section. If you don't know how StreamYard works, you can go into the comments. If you're watching this, just go into the comment section of this post that you're watching and just type in a stock that you want me to analyze. Now, because I am an expert in stocks, options, futures, and cryptocurrency, I can pretty much pull up anything that you guys give me. But what I would like for you to also do, and I'm trying to teach you guys this, is I want you to tell me how you want me to analyze it. Just don't say, "Hey, should I buy Apple?" Because there's so many people that are watching that's going to trade Apple 15 different ways. Do you want me to look at options on Apple? Even if you want me to look on at options on Apple, are you looking at options on Apple for today, for a week? Like, how long do you want to be in that particular trade? For like a week or a 2 week trade or a 3 week trade or a 3 year trade or an investment? I want you to specify how you want me to analyze it. If you just give me a stock, I'm just going to assume that it's for an investment, right? So I'm going to pull up my week chart. I'm going to look at it long term and think about, if you buy this stock 4, 5, 6 years down the line, what are the possibilities? What are the upsides? What are the downsides? And that's what I do as a technician. All right, we're going to look at the fundamentals today. We're also going to look at the technicals. But again, welcome to Ask the Trader. Again, I want you to ask me any questions that you want, even if it's not regarding the stock market. I know a lot of new people are getting into the market. A lot of newbies came into the market during the COVID period. So you've never seen a bear market. You've never seen a downturn in the market. So it can be a little frustrating to you, especially if you're 20, 30, 40% down. But if you're a technician and you look at charts, you're going to realize that stocks go down 20, 30, 40% all the time. All right. We are experiencing one of the worst downturns in history, of course. But we can survive it, right? We survived 2008 and 2009. We survived 2018. We survived the pandemic when the market dropped 35%. We survived the 2001 dot-com. So most of us really haven't become to, I always tell people this all the time. The technical side of the market that we're looking at now is not something that 25 or 30 years ago you were going to be able to read a book and understand how to look at it, right? Everything has we you know we have access to all the information that the billionaires and the millionaires are using. So it's a different time, and most of us are pioneers, and we're the first in our families to even do this, and that's why it feels a little funny. So my job is to try to get in contact with as many people as possible so that they can learn how to look at the fundamental side of the market as well as the technical side. So, don't keep all of this free information to yourself. Go ahead and share it to your page or share it with some of your friends that are investing and trading, because this is really the only market where you actually want everybody else to be involved in it, because that's how you make money. This is not one of those industries where you got the crab in the barrel mentality where I'm just going to keep all the information to myself. The more people and the more people that are knowledgeable about this, the more people that are getting involved in the stock market, the more money that flows into the market, the more money we are going to make. And I try to tell people this all the time. All right, the stock market is everything around you. Stock market is not going to go away. If the stock market goes away, then everything goes away, right? Because everything that you're investing in is like right now in your office, in your car, wherever you're in your cubicle, you can look around and see 10 different items that you can invest in just on your desk, just looking in front of you, what you have on, what you're wearing, right? Your glasses, your hat, the monitor that you're using, the phone that you're using, the car that you're driving, right? The place that you're working in, right? The facility that you're working in, everything around you is the stock market, and I try to teach that to people. But what we're going to talk about today is high level simplicity, right? I break down everything on its most simplistic in its most simplistic way so that you can understand why you're doing what you're doing. All right, you're going to learn the what would Joe do method. All right, it's a very simple method. When I was growing up, and I was taking English classes, and I'm not a linguist. I'm not really good at language, but my brain is more like math and graphs and numbers, right? But you always learn what, when, where, why, and how. So I said, well, why don't people apply this to the market? Right? If you apply the what, when, where, why, and how to the market, you probably will have better entries. You'll understand why you're investing or trading what you're trading. Right. So, I try to implement that. And if you're struggling today, if a lot of the stuff that we're talking about is not making sense, you can always go and watch my free videos on YouTube. If you're watching this on Facebook right now, there's a lot of free content that I put out there. There's so many individuals that I have come in contact with, thousands and thousands of people that learn, and they never even do a consultation with me. But unlike other teachers, I make myself approachable. Anybody can reach out to me. I know I'm a semi celebrity on Facebook, but you have access to me. Yeah, you're gonna have to pay to talk to me, but any questions that you have regarding the stock market, I'm here for you. And there's not too many people that's gonna give their access to you, because a lot of the people that are out there are frauds. They don't really invest in the market. They don't really understand stocks. They understand the surface level of it so that they can make money off of it. But I'm in the trenches with you. I have the same emotion that you have when Apple goes down or Nvidia goes down or when crypto goes down or when cannabis stocks go down, because I'm in the trenches. I'm buying everything that you're buying. I'm buying the options, right? So I feel what you feel and I understand what you're going through. So that's why I decided to become a coach and decided to become a consultant, because investing is a lifestyle. I try to teach this to everybody. Investing is a lifestyle. When you make this part of what you do on a daily basis, you're going to get rewarded for it. All right, you're just going to. There's going to be some downside, there's going to be some upside. But if you spend the time and you get educated by legitimate individuals, then I want you to adopt this type of thinking. Investing is a lifestyle. I also want you to understand that wealth is built from investing. I know that the name of the room is inside of trading. I get that. But trading, guys, is just another job. It's another vehicle that you can use to generate income so that you can reinvest it into yourself. And it's this part that most of you are not doing. right? You're not doing it. You don't want to hear about it. You don't want people to, you want to take shortcuts. Joel, I want to do what you're doing. Okay, well, you want to quit your job to create another job, right? I'm generating income trading, but then I'm reinvesting in myself. And my family didn't become millionaire. We did become millionaires by trading. I get that, right? But most of it came because of the profits that we made, the work that we had, the hustles that we had. We reinvested into ourselves and let the market, because it's rigged to go up, make you money. So a lot of the stuff that I'm showing you today, yes, is great. But I always tell people that when you're trading, you should be trading with about 10% of your total assets. You shouldn't be trading with 100% of it. And that's the problem, because there's going to be times where you're going to lose everything. And I don't want people to come into the market, lose everything, and never come back again. Investing and trading is dumb easy. You make it hard. You make it hard. I'm going to break it down. I am so consistent. You can go to my videos from 10 years ago and I am preaching the same thing, right? I was preaching the same thing 10 years ago when there were non believers. All right. Investing and trading is dumb easy if you know what to look for. Even when you're losing, at least you know why you lose. And that's the problem that a lot of people have. They don't know why they lose. They don't even know why they win. Right? Sometimes I'll win and I'll say, man, that was so lucky, even though I consider myself a guru, because you want to position yourself, you want to create that luck for yourself. All right. So I'm going to show you guys a couple of ways that you can do it. If you haven't, if you want to get, most of the videos that I have that's out there, I tell people this: look, I stop hating on all the educators that are out there. About one out of 10,000 educators out there are legitimate. And you guys are going to take your classes. You're going to do your thing. You're going to listen to what I say. And I want you to do that. You should never just listen to one person. You should listen to multiple people and see what the common denominator is, right? But what I tell people first is, before you go out there and spend 1,000, 10, 20, 30, $40,000, why don't you do a consultation with me so I can help guide you in the way that you need to go? Or if you want to take my videos, like if you wanted to learn futures, why are you guys paying $20,000 for a futures class when I got a $75 futures class that's probably better than that class that you taking for $10,000? And I hear this all the time, right? I have a beginner's video for I have a beginner video. I have a stock video for beginners. All right. I told you guys I'm fasting, so my brain ain't all the way there. All right. I have an options video. Why are you guys spending $30,000 on a class when you can take my options class first for 75 bucks? It might not even be something that you're interested in. You can spend $100 or $200, and I try to keep the prices low so that you guys won't make the same mistakes that I made when I first came into the market. Very first class I bought was $150. It was an Invest Tools class. And then they sold me on a $10,000 options class. No teacher, no nothing, for disc. Right. And I always laugh when I tell this story, because that same package is now worth 150 bucks. It was worth 150 then, but because they knew there was nobody out there that could teach options, they took advantage of me. And you guys are getting taken advantage of a lot of people out there because you don't know where to go. Come to me first, learn the basics, and then if you got money to burn, spend that money on those classes. All right. But take the cheaper route first, right? Get educated, right, from somebody that's doing the same thing that you're doing, and then you can go out there and spend that money. If you haven't downloaded my app, it's free. Go ahead and do it right now. If you got an iOS device, Google device, you can do that. And if you want to do the subscription service, it's $50 a month. You get access to all the information that I have, all the videos I have. The webinar week that I just did a couple of weeks ago, you'll have access to that too. All you got to do is email me, say, hey, Joel, I'm an ultimate member. Here's my receipt. Hey, can you send me those videos from last week? And you'll get the up to date information as well. Again, you can go to my YouTube, free information there. The What Would Joel Do method videos there, the what, when, where, why, and how, just to kind of break down the market. I do a couple of examples like I'm doing today. They're pretty much the StreamYard videos that I'm doing right now. And if you want your charts to look like mine, I'm going to have beautiful charts that I show you guys today. They're going to look clean. A lot of the indicators that I use today are not going to be on a lot of the platforms that you guys are using. So if you want your videos to look like mine, You can go to my PayHip. You can download this Thinkorswim chart setup video. You can get your charts to look like mine. And again, these are the different things that I offer: futures, options, Thinkorswim. If you want to learn how to day trade, you're trying to figure out how to do it, pay $75 first before you pay 75,000. All right. You guys can also go on the thing. If you have a TD Ameritrade platform, you can go to TD Ameritrade and they have free classes on everything that I offer. All right. So you get the free classes and you get my inexpensive classes before you go out there and take these expensive classes. All right. So what's the theme for today? The theme for today is stock repricing. All right. So last May, I kept telling people February. Sorry about that. February, we noticed that the market was turning around, but I did do a stock renovation repricing post that kind of was telling you guys that, the market has changed. Over the last 10 years, the bias was up. You could pull up a week chart. The bias was up every time the market came down to the 200 week or the 200 day. All you had to do was buy. It was the easiest trading period for the last decade. But things changed about a year ago, right? A year ago, everything changed. We got a storm of negative news, right? It wasn't just rates going up. It wasn't just the Feds raising interest rates. You had Russia invading Ukraine, which caused the price of oil. That was the start of the price of oil going through the roof, which we already was having inflationary issues in the first place. But there was so much negative information and news that came out in the last year. So the market is trying to digest it. We had a pandemic, right? We had a pandemic, Russia invading. We got interest rates. We had seen the market and the world was experiencing things that we had never seen in like over 100 years. So now, when the market is going up, when interest rates are low, and this is what I try to explain to these super traders or these investors out there that believe they know everything about the market changes with information. I like getting information, but I want to know with this information where the market could go. Before the market turned, bears that's been bearish for 10 years was like, I told you the market was going to turn. Well, you've been saying the market was going to go down for 10 years. And for 9 years, you've been wrong. And now you're right. But why are you right? And I like to get information and figure out why the market is going down. Why is the market going down? It's not because Biden is in office, right? And that's so funny to me that everybody wants to blame the administrations like the Trumps or the Obamas. No, the market is going down because interest rates were very, very low. Interest rates were at zero. When interest rates are at zero, that means that when investors come into the market and they kind of try to appraise what a company can do, the sky is the limit, right? So multiples were going up like crazy. And real investors, when they're looking at the market and they're looking at the PE ratios to see their price to earnings, trying to see the value of a stock, they kind of want to see where it can go. And stocks just went through the roof. Apple in 1 year went from $1 trillion to $2 trillion. It took 20 years for Apple to be worth $1 trillion, and then it doubled in another year. And that was after the pandemic. So pricing had just gotten ridiculous, right? But then once rates started to go down, once rates started to go up, interest rates, the Fed's raising the interest rates, it changes the game because now people can't use their real estate to do things, right? Real estate came to a halt. Real estate stopped inflating. And if you own a house, you've been very happy at what happened in the last 2 or 3 years, which is kind of interesting, right? Stock market, the real estate market didn't really do anything from about 2009. Well, 2009 to 12, it went up and then it kind of went flat for about, 5 or 6 years. And then it took the pandemic for real estate to go back up. Why is that? Because during the pandemic, people had to stay home. And when people were staying at home and when people started to love the homes that they were in. And while they're in these particular homes and loving these different homes, they decided, hey, I'm going to do some work to my house, right? I got to live in my house anyway. And there are actors and movie stars and basketball players and a lot of people out there that had a lot of money that never really, they've been out and about so long, they never really got a chance to enjoy the house that they were in. And I know you guys are like, well, why are you talking about the movie stars and the people that have money? Because if you're in the real estate market, you already understand that California, New York, and Florida pushes the real estate market. If you look at those three markets, that market brings the real estate prices up and then inflates the price of everything. So everything started to go through the roof. So the Fed said, look, this has to stop. We got to raise these interest rates from zero pretty much to about 4 to 5%. And that's huge in the real estate market, right? So then you started to see markets fall. So I want you guys to take notes and say, look, in the future, if you ever see the Feds becoming what we call hawkish, hawkish means rates going up. Anytime the Feds get hawkish, the market is going to go down. The market is going to go down, right? Anytime they get hawkish. Now the Feds have been hawkish before, but they've never been hawkish in this particular way because we were literally going from zero to something, right? And because now the banks need to make a little bit of money, but when interest rates go up, what ends up happening? You can't afford as much house anymore, right? That car that you were trying to buy, why are we trying to get lower interest rates, right? So we can have a lower payment. We can't afford as much car as we want. Dang, that $80,000 vehicle I was looking at, now I got to look at a 30 or $40,000 vehicle. That six or $700,000 house I was looking at, now I got to look at 3 or 400, right? And if you're already in your house, you can't really even sell because think about it. Even if you decide to sell your house at the highs right now and you want something that's bigger, you're going to have to take a higher interest rate, right? You probably gonna go into the same house at the same price. So people are stuck in the house that they're in. So I'm saying all of this to tell you that there's been a repricing of stocks. All right, so I think enough people are on. So we're gonna look at the market right now. We're gonna look at different stocks, but I'm gonna look at them long term, short term. But I want you guys to understand because I'm gonna pull up Yahoo Finance and we're gonna look at different things like cash flow, right? We're going to look at realistic expectations on what that stock can actually do. We're going to look at the multiple compressions, right? What's the multiple, Joes? What are you talking about, right? And try to make some sense out of what the market is starting to do now. Now the investors are looking for companies that are cash flow positive or looking for companies that have PE ratios around 15 or 16 versus a 30 or a 35 multiple. All right. So let me go ahead and pull up some of you guys' comments. Make sure that you guys can hear me. I see a happy new year from Dion Blanks. Happy new year to you as well. All right, we'll look at Target or O. We'll look at both of them. Let me go ahead and pull up my charts. All right, get my mug off. And let's change the banner. All right, all right. So before we get to Target and O, I'll go ahead and well, Target is already over here, and then I'll add O. So when looking at the largest company, let me go ahead and take these shades. The shades were for my photo op. But when looking at the 500 largest companies, you're going to get an idea of what the stock market has done. So let me clear this out so you can see how this looks without anything on it. Pull up a clean chart. So this is a clean chart, right? So this is the S&P. All right. Think we're back in business. Cool. Sorry about that. I don't know why my internet went out. All right. Cool. Now that we got that out the way, let's get back to business. All right. Let's look at the S&P 500. So the S&P 500, the S&P 500, you're going to have a yellow bar. The yellow bar is going to be the week, right? The 200-day week. If I pull up a blue line, you're going to see the 200-day moving average, and it's going to look like this. All right. So when looking at the S&P 500, what is the bias? The bias is up. When this is up, that means that there's as long as this is going up, and this has been going up for a very, very, very long time, ever since 2012. From 2012 until now, the market has been going straight up. Okay. So when you add the candles to it, that's how it's going to look. So if you notice, this is what's been going on. The market started to get very, very bullish right around 2012, 2013, and it was very easy to invest. You invest every time it touched the 200 week. And then within that, if you wanted to trade, you could use the 200-day moving average. And every single time, remember, I went all the way back to 2012. Every single time you get close to this 200-day moving average, you could have bought because it was angled up. It started to angle a little down here, which was 2011. This is 2012. And then you could have bought and the S&P 500 represents the market, right? It represents everything that's around you because it's the 500 largest companies. And look at that. Anytime you touch the 200-day moving average, it was very easy to understand when to buy. All the market did was go up, down, up, down, up, down. You could have drawn these little lines here called trend lines. Every time we broke a trend, we went right back up, back to the resistance area. We broke this trend, we went right back up to the resistance area. We broke this trend, we went right back to the resistance area. We broke this trend, we went right back to the resistance area. And I know it looks easy here, and you're like, well, how come I can't trade it this way? Well, for one, you've told yourself that investing in the market is hard. You break this trend, it goes back to the resistance area. The problem is, most of you guys didn't know when the market and the bias started to go down. When the bias starts to go down, it changes. You can't buy every time it touches the 200-day. This is 2016. From 2015 to 2016, maybe stay away from the market. Soon as the 200-day starts to turn around again, guess what? Same thing. Buy every time. Buy every time it touches the 200-day moving average. I'm giving you guys $1 million worth of information for free. Why? Because the more you guys that understand this, the more money I'm gonna make. All right. I love hanging out with my millionaire friends. I don't have to pay for restaurants. I can go visit them in their condos and their second homes that they bought. I can ride on their yachts. I love hanging out with my rich friends. Right? I want you to make money in this market and say you know me, and when I'm in the area, invite me over. All right? Because look, it's very, very easy. All right. And then you see this every time it touched the 200-day, you knew to buy. So what happened recently? Why didn't it work this time around? This is 2018. Let's skip let's skip to even during 2020. This is what happened in 2020. All you had to do is if you just knew how to draw this one little line right here, you would have known when to get back in the market. Y'all see that one little line, one little line. Yeah, you could have said, "Hey, it hit the 200-day," and you would have said, "Oh my God, I'm losing, 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 losing." And you would have stayed with it, or you would have gotten out. A lot of us got out because this started to turn down. When it started to turn down, a lot of us got out, and then we had to re-enter here. But even if you made money for 10 years and you bought in right here and you took that loss because of COVID, right? And then it started to go down in price and this started to turn down. You could have put a line here and you could have said, you know what? I know that we're probably going to visit this 200 day again. Even if this was angled down, we probably going to enter it again. So a lot of people said, you know what? This looks like a downturn. Why don't I get out when we hit the 200 day? So even though you were losing here, you could have waited, and you could have, if you were going to sell, you could have sold everything right here, because the rule is you're going to see the 200-day moving average on the S&P 500 at least once or twice a year. All right. If you're a technician, you would know this by going back and looking at the 200-day and say, hey, how many times did we touch this 200-day, either from the downside, from the upside, or from underneath? Same thing happened now. Watch this. I know a lot of you guys that were trading the market and you were buying here on, at the 200-day. This is 2022. This happened to so many of you. You bought here, and then this happened. Maybe you were taking classes in March or April, and you had options and stuff because the 200-day was angled up. The 200-week was angled up. Nothing told you to get out the market because for 12 years you have been right. You don't change your bias until the information changes. I don't care how you feel about the information that you got. Okay? You don't change until the charts change. The chart started to change here. So what you should have said to yourself was, once it started to go down, and this is when we started to come into the market in March and April and May. Y'all see, this is May. May, it started to go down. I put out that post in May. I said, guys, it's stock renovation time. Why? Because I'm a person that's been trading this market for a very long time. And you guys are in the room, but you're not utilizing the information or utilizing my brain. Maybe I haven't proven enough to you guys to understand the market. In May, I said, you might want to start renovating and doing different things with your stock. Even if you had stayed in it and said, dang it, this is going to be a downtrend. Even if you had put this one little line here and you said, Joel says we're going to see this 200-day at least once or twice a year, that's when everybody got out right here. Almost like clockwork right there at the 200-day. You think it just happened on that particular day? Something happened and it turned the market around? No. These are the people that are fundamentally handling all of your money, and they all collectively came together and said, when are we going to get out of this mess of a 200-day moving average? The only reason you didn't know about it is because you still refuse to learn the technicals of the market. It's not my fault. I knew it. In May, I tried to tell you guys for free. I said, hey, all right, guys, bears, you are right. I have no problem admitting when I'm wrong. But I had to wait for 12 years to be wrong. And I said, hey, guys, this market is different. The technicals are now saying that the 200-day is angled down. And I know that when the 200-day moving average turns down, it takes about 6 to 12 months. If it starts to turn it around. And if it keeps going down for about a year, there's a problem. We are in a bear market. So you had ample time, May, June, July, August. You had ample time to reposition yourself. I repositioned myself. I put out posts. I said, guys, I'm only 50, 60, 70% invested now. I've taken all of my money out the market because the market can go down. And even if we do figure out this and start to turn around, I can get in late. There's nothing wrong with getting in later. But a lot of you guys held on because you didn't want to take a loss. Then the market gave you another chance to get out at the 200-day moving average, which was just a couple of weeks ago. And I understand this one because we started entering December, and I get it. Even myself, I was like, hey, we might be able to get this Christmas rally. Maybe if we get this Christmas rally, we get above here. And look at what happened. We hit it perfectly, and then we just reversed. Okay. Very simple if you understand it, if you take your emotions out of the market and you start to understand why things are happening. All right. Now, you guys it's gonna be like a magic show. I'm going to show you guys a lot of different stocks, and you're going to see the same patterns. You might see different patterns on stocks that are bullish right now. All right, for example, let's look at let's and you know what? Before I get to you guys' stocks, I'm going to go ahead and these were stocks that were given to me before. So what I'll do is I'm going to go through these stocks first, A through X, and then I'll get to you guys' stocks in the comment section. All right. So let's look at the most popular stock on the planet, which is Apple. Apple, let's look at the bias of Apple. Apple's bias is up. So if you're thinking of buying this long term, there's nothing on your charts that's telling you that Apple is going to go down. I don't give a dang what Mr. Bearish person been saying, because if you've been bearish on Apple, you've been wrong. And let me tell you guys about bears. Bears never admit when they're wrong. Bears will be bearish and negative on the market till the cows come home. They'll never admit it. They'll never admit the money that they never made in a particular company. They'll never admit that they didn't make you money. They're just waiting, just like everybody else, for that company to fail so they can say, I told you so, and then look correct, right? But Apple's been going up forever. And a lot of people didn't make money on it. Apple's been bullish since 2005. It gave you 18 years of positive money. So I don't want to hear anybody say they knew Apple was about to go down now. No, you didn't. It just so happened to go down because the market's going down. And Apple's still not finished. Apple might continue to go up for the next 10 or 15 years because the charts have told us that it's not time to get out of it yet. Now, that's long term. Short term, maybe a year, maybe a couple of months. What's going on with Apple? Because you guys got to start separating your investing mind from your trading mind. Short term, Apple, the bias. Let's look at the bias. Hold on. Let me look at the bias. Hold on. What did I call it? Oh. This is what's happening. What do you guys notice? The bias is down. Short term. Short term means a couple of months, maybe even a year. When did Apple start to turn down? Well, it took one small turn down in June. Then it started to rise, and then it started to go down again in October. So in October, guys, I'm not in Apple anymore. I own one share. I was in Apple for, guys, y'all remember looking at my percentages? I used to love bragging. I would come on, I would say, hey guys, look at my percentage in Apple. I'm up like 200, 300%. I loved it. I love showing it off because it shows you how you could hodl something and be in it for years, because it takes discipline to do it. I just sold it, right? Now, I know that Apple can go up, but if I've been making money on Apple for 5, 6 years, sometimes you might want to make a change. Apple started to go down in an environment that's not the same environment that we've been in for the last 10 years. The leaders that have been leading for the past decade might not be the same leaders in the next decade. And it's kind of hard for people to understand that, because we love to buy things at the highs. Everybody loves to buy Apple once it's gone up 10,000%. And it's hard to sell that stock that you're up 300% in, right? But a lot of people took profits last year because it was the end of the year, you know, and you gotta decide, when do I want to pay capital gains on it, right? And that's kind of what you've been seeing. So Apple started to go down in October. I'm probably going to get back in Apple again, but I'm not going to be able to brag and show my 300% return anymore, right? I'm going to have to start fresh just like everybody else. And I don't like that. But Apple told you when to get out. It was clear as day. A lot of you guys just weren't able to accept it because you just don't want to accept it. I do not want to accept taking a loss, Joel. I'm just not going to do it. I can't take any more losses. I'm just going to hold on for dear life. It's been going up for 12, 13 years. I get that. But understand why you're losing. Understand that this 200-day is angled down. So if it's down next week and the week after that and the week after that and the month after that, you got to accept that that's probably what it's going to do. So what I like to do is I like to see where maybe it can go to. And that you can only get that from charts. So when you pull up charts, you know, I put out a post that a lot of stocks, and I don't think Apple is going to do it, but a lot of stocks are going to their COVID lows. Oh my God, if Apple ever went back to $53 a share, you would think that the world was coming to an end. So, what are the next levels that Apple can go to? Because it looks like we broke what we call a support area. This is a support area, and it broke it. See that? It broke this support area. So that means it's probably going either to this support or this support area. Apple can get down to the 115 area, people, because that's where it broke out of last year. Actually, no, it didn't. Hold up. February, January. Oh, yeah. It dropped in January. It hit the 200-day moving average. Y'all see this perfectly. Everybody did what they were supposed to do. And they bought it here and they bought it here. And they were like, Joel's a genius. And I'm like, the 200 days been around forever, but thank you. And it was working. Options plays, you were making money, making money, making money, making money, making money, making money. Why is it not making money anymore, Joel? Your strategy sucks. No, you suck because you didn't even know that the 200 days started to turn down. Okay. When things are going up, everybody's a genius. When things start to come down, you want to blame everybody else for your shortcomings. When all you had to do was learn how to pull up a chart. All right. So that's Apple. All right. Let's look at Amazon real quick. Amazon, what's the bias? The bias of Amazon is up. But what is the 200-day saying? The 200-day has been angled down. The 200-day started to angle down in March of last year. It's been almost a year that Amazon's 200-day started to go down. So anybody that was buying it in the last 8 or 9 months, you don't know what you're doing. I don't own any Amazon. I'm sorry. When I say I don't own anything, I might own one share. Remember, I got large accounts. So when I own one share of something, that it's like a placeholder for me. Amazon can go to zero. I don't care. I lose what, $85. It's a placeholder for me. So that I know, all right, when it gets to a price that I want to buy it at, maybe I want to invest in it. But what I do love about this chart is these are the COVID lows. Remember, guys, every stock looks like it wants to go to its COVID lows. Guess where Amazon is, guys? Perfectly. It's perfectly at its COVID lows. When it started to drop in price, you should have known where it was going. If you didn't know where Amazon was going when it broke the 101 area and you didn't think it could go to 85, you don't know how to look at charts because it was clear as day where it was going. Everything is going to their COVID lows. Every chart we look at, it's going to look like I tell you, it's going to look like a magic trick that I'm doing. Take the time to learn this. Amazon gave you ample opportunity to get out. Look, at the 200-day, at the 200-day. If Amazon starts to run, where do y'all think it's running? To the 200-day first. So if you got options on Amazon, why are y'all buying options at 170 and 180 and 190 for like the next 3 or 4 months? That don't make any sense whatsoever. Now, if you told me you had options at the 117, 120 area, that makes more sense because we're in a bear market. That means it's probably going to hit the 200-day in reverse. And until this starts to flatten out and go up, you're going to keep seeing that. Yes, can you see a move that goes like this? I hear this all the time. Joel, I bought it and it went straight through the 200-day. But guess what's going to happen? Even if this stock goes up like this, it takes 2 or 3 Viagras. It's still going to come back. Guess where, guys? Back to the 200-day before it starts to go higher. So why, like if you know this, if you can predict kind of what you think it can do, you're going to become a better trader, a better investor. It can overshoot this, but stocks rarely run and never come back. It's going to see its 200-day once or twice, The bigger companies, like the small cap companies, you know, I get it. Sometimes they just run because they're so small they can grow and they might not see their 200 day for a year or two. But the bigger companies, the trillion dollar, 500 million, 500 billion-dollar companies, they're going to be technically sound because it's so much money invested in these companies. You can watch them technically and kind of predict them. I always tell people all the time, the best companies to predict are the largest companies that are out there. The smaller a company is, the less predictable it is, right? If I was out at sea and I saw somebody on some jet skis and I saw a cruise line, the jet skis can turn left, right, and you can't really figure out what it's going to do. But if a cruise line starts to turn left, you can see it. You're like, oh, it's going to take about 5-10 minutes for it to turn left or for it to turn right. The bigger a company is, the easier it is to predict, the easier it is to make money on it. But I see you guys do the opposite. Y'all are trade these smaller companies that are not predictable. I get it. They got high beta, so you can make a lot of money, but you can make a lot of money on Amazon. Let's look at Amazon options. Amazon options today, just in 24 hours, were up. Hold up. Dang, doesn't have the. Oh, all right. Dang, where's the percentages? Oh man, I must not have used this in a minute. My percentages are gone. Hold on. There we go. Let's add this on the spot. Amazon options are up 39% in one day. All right. Could you imagine making 39% in one day? That's what the options market gives you. Right. And I don't want you guys to run out there. I saw with my own eyes, Joel pulled up an options chart and Amazon was up 39%. I'm gonna put all my money on Amazon. I get it. You can make a lot of money in a day or two. That's why we always tell you, hey, it's kind of cool to trade options, right? Because Amazon's up 2%. Its options are up 40%. That's a real number, guys. 40%. If you had $100 invested yesterday, it'd be worth 140 today. You had $1,000 invested in Amazon yesterday, you would have made another, $390 today, right? So that's the beauty of options, right? But you guys got to understand what you're doing, right? You got to understand what you're doing so you can make a whole bunch of money. You just got to know what you're doing. All right, let's look at Costco, and I'm going to breeze through the rest of these. Costco, one of my favorites. All right. Costco, the 200 day is actually starting to turn down, which I don't like. Now, I started buying uh Costco because I'm trying to buy companies that do well during recessionary periods, right? Now I know Costco, Target, Walmart, Dollar Tree, these are four companies that I've been kind of holding. So out of my portfolio that I'm only 50% invested in, I'm out of the Apples, the Microsofts, the Googles, the Teslas. I still own my I still own a full position in Nvidia, but I've sold my other semiconductor companies because I see some downfall. But then the rest of my portfolio is kind of defensive. So it's gonna be in Walmart that's up today. It's gonna be in Target. It's gonna be in Costco. Because when the market turns around, these are the companies that are going to turn around first. And as you can see, look at this little spike. I've been telling a lot of people to buy this stock, right? Noble loves this stock. I think this might be his favorite stock. All right. But, what did I notice on my charts? I noticed that there was a support area right around here. And just if you were, and I mean, these were lows here, but these were the lows of 2022. But even when the market started to go up, you could have drawn a line right here. And once you started to break that trend and started to go up, you knew where it was going to. It was going to 520, it looks like. Okay. Even if you were underneath and losing, you kind of have what I love about the 200 days, it gives you a chance to get out just in case you were wrong or just in case it goes against you. Cause you're like, well, at least I can just wait until it hits the 200 again and then maybe I'll get out if it's turned down. If it's turned up, you stay with it. And then look, people tried to buy it again right here. And then it turned down. And then when it started to turn down, the 200-day started to turn down. But look, it gave you ample opportunity to get out. Oh, dang, I'm wrong. I'm wrong. I'm wrong. Well, if I'm wrong, I guess I need to get out right here. And look at what it did. It gave everybody opportunity to get out. It reversed, hit it again, reversed. And now a lot of us are stuck in it. A lot of people know where this is going. So if you're in it right now, if you called me today and was like, well, Joel, I got options on Costco, but my options are at like 505. I can go into the options market right now and look at the 505 area. It's probably the one that's going to have the most volume, right? So if I go into the volume, where do y'all see all the volume at? There's 1,000 contracts here. If I go to January 27th, I guarantee the 505, the 500 area is going to have, well, there are a lot of contracts at the 525, 530 area. But the options is also telling you where they think it's going to go. Why get a 485, 490? If it goes to 485 or 490, is probably going to go to 500, which is right here. This is how you trade the market realistically. But for you guys buying options at 600, like that makes no freaking sense unless you got a 2-year leap or a 3-year leap on it. But to go 2 weeks out and think you're going to hit 600, you don't like your money. I see it all the time. All right. So there was a nice little spike here. When things spike like that, I hate it because there's always a gap, and 80% of gaps fill. That means at some point in time, we're going to go back to this price here. There's an 80% chance that we're going to go back to 455. But if I was a betting man, it's probably going to go to 506 first before it gets back down to 455. Okay. So that's Costco. Let's look at Ford real quick. Ford bias up. And what I love about this is look at this week chart. It just started to get kind of biased in June of last year. Doesn't mean that it's going to stay that way, but I don't care about what people say. This means that money, when you see a 200 week angled up, that means that for 200 weeks, think about this. Think about the psychological part of this. For 200 weeks, the average price of Ford has been going up. Now, how many weeks is 200 weeks? That's half a year. For half a year, the Ford's price average has been going up. That's telling you something. It's telling you that people are buying the stock. Now, can it turn? Yeah, it can turn at any point. But if you use these 200 weeks and you understand why you're doing it, see, when this started to turn around, even if you had got in late and you had gotten in Ford at $9, just by saying, well, this 200 week is angled up and it's just now angling up. So maybe I got a little bit of time for it to stay up before it starts to go down. You could have gotten in late at $9 and still rode this bad boy at 20. Okay. And I get here, you missed this whole run, right? As it started to turn around. If you had gotten in around 11, it went all the way to 25. And then you should have known when it broke this trend. When it broke this trend, you knew where it was going. Everybody and their mama knew where it was going. Everybody knew where it was going. When it broke this trend, it was a straight line to the 200 week. Straight line. And because it's angled up, the smart investors, the one percenters like myself, are like, ooh, even on this move right here, I know it doesn't look like a lot. Joel, it just went from $11 to 16. That ain't nothing. 11 to 16 is a 50% return. Do you know how much money you would have made in the options market on a 50% return on a stock like this? You would have made all the money you needed to make for the whole year in what, from April to like July. Huge amounts of money was made right here. All you had to do was buy it here. Well, guess where we at right now? The same place. Please don't run out there and buy it just because you saw this move, because what you also didn't notice is that if you draw a trend here, you have some resistance. So please don't buy it here because we're here, because now look at where you probably can go to. Maybe 13. If it breaks that 13, if you learn how to do support and resistance, maybe it goes to here. But you see how, like, you create the picture on your charts to kind of give you an idea of what it can do. Most of you guys don't know how to do this. You're trading off of Reddit rooms. You guys got 9 to 5s, and you're like, Joel, I just don't have time. Just tell me what to buy. Tell me when to get out. That's gambling, guys. That's gambling. Well, Joel, I'm just going to take this. Like, even my subscription service, I love it. Yeah, y'all pay me $50 a month for it. But if you don't know how to use it, I don't want my information to come out. You take my alerts and just buy because you see the whole. I know a lot of people see the whole list. They just buy the whole list. Then when they don't make money the next day, they don't understand why. Oh, I'm just canceling my service. He don't know what he's talking about. Guys, there's no alert service that knows exactly where everything is going to go to. All right. You guys got to know how to take that information and what are you going to do with it? All right. You get an alert from somebody that says buy forward options at 16. Do you even know why? Now you can pull up a chart and say, oh, it's at 16 because that was a resistance area that it hit in August. But you're like, hold up, it told me to buy a $16 option in the next 2 weeks. Well, it took almost 6 months for it to drop to this price. So you think it's gonna take 6 weeks for it to get back to 16? If you think that's the case, you don't know what you're doing. That's not realistic. Okay. Investment wise, and I haven't been doing this. Let's go to Yahoo Finance. Why are people buying stuff like Ford and General Motors? And I forgot to do this, right? We talked about PE ratios, right? Well, the PE ratio for Ford is 5. Think about this. Most people want to see a PE ratio of 15 or less. Do y'all know that Ford offers a 5% dividend? A lot of you guys didn't know this. Ford offers a 5% dividend, people. 5. 5. And I see a bunch of y'all running out doing this, buying stuff like AT&T. Well, AT&T offers a 6% dividend, Joel. Yeah, but did you look at AT&T's chart? Obviously you didn't. Because if you looked at AT&T's chart, this is what you see. You see a week chart that's going down, 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 down. And I'm like, you got Ford and you got AT&T. They tricked you by paying an extra 1%. Now, if you came to me and said, well, Joel, I bought it because we hit a support area, then I'm going to respect what you did. But I'm not going to respect the fact that you bought AT&T because everybody got a cell phone. And that's going to always be a constant. If you say, hey, Joe, I bought it because it was a major support area around 16, and I think it could run to maybe where we at right now. Maybe it can run to 22, which is another $3 move. Then I can respect your call. But I can't respect your call by, hey, I'm just going out there. I Google who offers the highest dividends, and I'm just going to buy that stock. And I see a lot of you grown folks doing this. 200 week is angled down. 200 day is angled. Okay, it's starting to flatten out. So I get it if you're buying it now, but it's because you got lucky. You gotta always realize when you got lucky. Okay. Ooh, I didn't even check none of that stuff, but whoo, thank God this 200-day is starting to angle up because the people that bought it way back here got a 5 or 6% dividend, but the stock is down. What percent? The stock is down freaking 35%. You took a 6% dividend to earn negative 35% on your stock. That makes no sense whatsoever. They fool y'all by getting these high dividends. That's why everybody's running into Ford though, because they're like, hold up. Ford actually, I know the 200-day is angled down, but at least the 200-week looks promising. The 200-week looks promising. And it offers a 5% dividend. That's why it's up 2% today. Because the traders that are looking for deals are looking and saying, oh man, the PE ratio is under 15. But here's where it goes wrong when you go to the financials and you look at the cash flow. Oh, it does have positive cash flow. It has free cash flow. Guys, you want to see a company with free cash flow. Why? Because when a company has free cash flow, that means they can reinvest into their stock. They can reinvest into options. They can do M&As, which is mergers and acquisitions. They have money to play with. So it's got a low multiple. The 200-week is starting to angle up. It's down 50 or 60%. It offers a 4% dividend, and the company has has positive cash flow, and they're about to drop all of these new electric cars. Ooh, now you're understanding how investors are starting to appraise stocks. Okay. Hopefully you guys were able to digest all of that, right? Oh, that's AT&T I'm looking at. Sorry, that was AT&T. They do have positive cash flow. I don't know why AT&T popped up instead of Ford. I think Ford has negative, to be honest. Let me look at it. I thought the last time I looked at it, it was down. Nope. Positive cash flow also. Okay. Positive cash flow. Okay. Now, they haven't repurchased any stock lately, but they have positive cash flow. It's not as much as it was back in 2020, but it's positive, and that's what you're looking for. Well, that's not what you're looking for, but that's if you want to kind of play defensively and kind of think how the big hedge funds and the big money managers are thinking, this is what they're doing. All right. All right. I'm going to get to you guys' questions. What time is it? 2? All right. Let me get to the rest of these stocks real quick. FedEx, 200-day is starting to angle, 200-week is starting to angle down. So the bias is down for the moment. How far can FedEx go? Well, FedEx can go to its 2020 lows, which is March 2020. So FedEx can go down here. And if you notice, y'all see this little arrow here? That's me doing my homework. That's me putting an alert for when this gets to its 2020 lows, because I don't own FedEx, but I can't look at 1,000 stocks all the time. Right. So why do I do sessions like this? Because I'm doing my homework now. If I see areas where I might want to buy, I'll quickly go to my chart just like this, hit create alert, bam, at or below. Bam, at or below this price, I'm going to get an alert. I'm going to get a text that says, hey, FedEx is at 120. So then I'm going to pull up the chart and say, why did I put an alert for Fed? I wasn't even looking at FedEx. Why did I put an alert at 118? So then when I pull up my chart that day, I'll say, oh, it's at 120. Oh, it's probably about to get to 92. Now I can start positioning myself. It hasn't gotten to 92 yet. It's at 120. So if I know that it's probably going to drop, because if it gets to 120, it's probably going to 90. All right. That's just how stocks work. If there's a support area or a resistance area, it's just going to go ahead and get there because that's the best risk to reward, right? It's a best risk to reward to buy this. When it was here, a lot of people were waiting for it to get to here. Now that it's going up, Even if I wanted to short FedEx, I'm not going to short FedEx right here. I'm going to short FedEx when it gets to 207. Why? Because that's a resistance area that I can probably short it at. So just go ahead and let that bad boy go up to 207. All right. And that's how the charts are going to work. They're going to be that easy. I know it's hard for you to, it's hard to believe that it's this easy, but I told you, I don't care what stock we look at today, it's going to be like a magic show because I don't have 15 or 27 indicators on my chart. And I'm not giving y'all this, my bias on that particular stock. I'm showing you guys strictly from what I teach. General Motors, same thing. But if you learn the methods to my madness, you're going to be able to understand as well. General Motors has been positive, right? 200 week is sideways. It's not quite down yet, but what is it doing? Short term, it's going down. Where did we go to? If you wanted to short General Motors, why are you shorting it way down here? You knew where to short it, just like everybody else and they mama knew where to short it because General Motors is going to give you a chance to short it at the 200-day. It's probably going to 37. We're at 35.83 right now. Guys, 37 ain't but a point and a half away. And I see some of you guys take option plays and will do a 42 or a 41. And then it'll hit 37, 38. You'll be up 30, 40, 50%. You get greedy. And then you wonder why it never gets to 42. Because you were lucky that it got to 39. It can get to 42, but you got to go a little bit further out. But if you're trying to get a quick call option on General Motors, you're trying to make some quick money real quick, the best risk to reward is going to be this 37 option. So even when I go in here and look at General Motors and I go out a week or two, I want to look at the 37. Guys, look, 37 is going to have the most contracts. Why? Because these are the smart people that are looking at the market. Sometimes y'all are like, Joel, how did you even, what are you looking at? Volume? Where you get that volume from? If you buying options and you ain't looking at volume, you don't know how to trade options. Or fire the teacher that's teaching you options. Because if you're not looking at options and volume and open interest, like I don't understand how you guys are trading. You're gambling. You've been gambling for a very long time. Stop doing it. Learn it. Let's look at the financials. The financials of General Motors. Why are people so in love with General Motors? Why did I take all my money out of Tesla and I'm invested in Ford and General Motors? Because A, they offer a dividend. Ford offers 4%? General Motors offers a 1% dividend. The PE ratio is under 15. But what's important is these financials. Does it have cash flow? Can it do mergers and acquisitions? Can it reinvest into their stock? It sure can. For now, it can. For a second, it couldn't. It was negative, right? Because they had been putting money into their electric market. You remember when Ford, General Motors came out and said, we're going to put 10, 15, 20 billion into investing into the electric car space. So that's why so many people are more about Ford than General Motors. But at some point, if General Motors start becoming cash flow positive, you're going to really see that stock spike. And when you look at how much it's worth, when you pull up the summary of General Motors, you see that it's worth 50 billion. Do you honestly believe that Ford and General Motors makes the same amount of money? Why does Ford and General Motors have the same exact market cap? Because people that are investing in the market, the trillions of dollars is rolling into the market. If they're buying Ford, they're probably buying General Motors. If I buy Ford, hey, if I got $5,000, let me put $2,500 in Ford, $2,500 in General Motors. One of them is going to win. That's how the 1%ers think. They're not making the same amount of money, but the companies are the same. They don't have the same cash flow. Ford is more cash flow positive than General Motors. So why is it that their stock price market cap is the same? Because I want you guys to get outside of that thinking of like, you shouldn't be thinking that A plus B is equal to C, and therefore their stock price has to be this price because this is happening and this is happening. That's not how the investing side works. There's investor sentiment. If investors don't want to buy it, they ain't buying it. I've seen companies that are cash flow positive go down. I've seen companies that don't make any money go up, right? It depends on what that investor is doing. So you can't understand or see any of that stuff if you don't pull up a chart. If you can't pull up a chart and see this with your own eyes, it's going to be very, very hard to trade or invest in the market. Google, short term down. Y'all see that? If you're wondering why Google ain't going up in price, 200 days started to go down back in April. Where you been? April, May, June, July, August, September, October, November. It's been 8 months. 8 months. When it started to turn down in May, hey guys, I think you need to reinvest in other companies because it's about to get ugly. Because I know that when a 200-day starts to turn down, it's going to take 6 to 12 months for that bad boy to turn back around. You just got to understand that. So when this bad boy starts to turn up, all you bears, same thing. I've seen you guys have been right. But when it turns around, remember the market goes up 3 out of 4 times. 3 out of 4 times, 3 out of 4 days, the market is up. It just so happens that the market's been going down like crazy in the last year. But over the history of the market spends more time going sideways to up than down. So if you're just a bear, you probably are a trader and you don't really invest in the market. Most like true bears, they don't invest in the market because they don't believe stocks are priced at any price. Like, and they're safe by trading, by putting their money in and out the market. I could still hate the market and still trade it because I don't believe stocks will ever go back up in price. And they're probably not wealthy. I see it all the time, right? If I'm talking to you, I'm sorry if I hurt your feelings, but that's just how it is. You got to have a bullish sentiment if you want to make money long term. You can't be thinking that the world is going to come to an end all the time because the market is rigged to go up in price. But there are short term periods where the market goes down. But I always challenge that bear and I always ask that bear, well, when are you going to get back in? Because if you didn't get into the market for the last 10 years, when are you going to get back into the market? You think we going back to the same prices from 10 years ago? The charts tell you that hardly ever happens. We might pull back 3, 4 years, but 10 years, you think we're going to go back to the 2008, 2009 lows? That's just ridiculous thinking, especially knowing that we print money. The reason why the market is even higher now is because we're printing trillions and trillions and trillions of dollars. And where y'all think that money is going to into the market? So it's almost impossible to go back to where we came from because we already printed 10 trillion. You can't go back to somewhere we came from if we printed $10 trillion. Like, that's just a baseline understanding of money. All right, that a lot of people just don't want to accept yet. All right, but Google's going down. The week chart is going up. So Google long term, yeah, you might want to buy it. Short term, it's going to be some pain. If it starts to run, where is it running to? 10, what does that say? 109. Option players out there, y'all shouldn't have no options higher than 109. If it starts to run. And can we go here and that be the end? Can this be it and we finally turn around? Yeah. But I'm going to tell y'all what we going to do. Even if it shoots like this and goes to 128, it's going to come back to 109, play around here, come down here, go up here, maybe come down here before it starts to go up again. Because that's what the stock market does. It's going to retest areas of resistance and support. You don't notice if you can't see a chart. We all know where it's going to, 109. Anybody buying options higher than 109 don't know how to trade. If it's within the next 6 months, you don't know how to trade, right? You're gambling. And it's a 0% chance that it's going to hit those targets that you wanted to get to. So if you're stuck in something, you got to say, when can I get out? Well, Joel, I need to figure out when to get out. Well, we got a nice little spike here. then it went down. But you gotta, if you're stuck in that thing, the best case scenario is going to be 105, and it probably will. Look, it took November till now. It took 3 months. We've been going sideways. Probably going to take another 2 or 3 months to get here. It's not going to happen overnight. Sometimes stocks will spike, but a stock to spike, you telling me? I mean, Google could pop 20% in one day. That's huge for a company that's $1 trillion in size. That means $200 billion has to go into Google. It has to be some really, really good information for it to pop in one day. But more than likely, even if it goes there, it's going to grind up. It's going to grind. It's going to grind. It's going to grind. It's going to look just like this until it gets there. Because that's what it does. It stair steps up and it goes down. It's going to grind to get there. All right. But why is everybody interested in Google? Why is Google on everybody's radar? Because Google does it offer a dividend? A dividend is what a company will pay you to own it. Doesn't offer a dividend, but its PE ratio is 18. Y'all understand that a multiple of 18 is ridiculous for a company like this? And that's what everybody's looking at. They're looking at the beta being under 1.1. Its market cap is $1 trillion, so it is big. But that PE ratio of 18 is beautiful. If it can get to 16, 15, that's kind of cool. Look, its 1-year target is 129. So that's why you see a lot of investors investing in it right now. But short-term trading, it might be some pain. We might go back to the lows. Do I think it can go to the lows of the pandemic? I don't know. Let's look at a week chart. The lows of the pandemic was this price way down here. Could we get to this price? Anything is possible. Can we get to this price? Yeah. Shoot, we closer to this price than the highs. So yeah, it's a possibility that Google can drop to $55. And guess what? That's why I have an alert here, an alert here. I have an alert here in case we break this low. Because if we break this low, we probably going lower because the next support area for Google is here. And then if we break that, if we break 70, we're just going to go to 51. It's just going to happen. Okay? Because that's how stocks do. People give up and they get out of it because they pull the numbers. They're like, hold up, if I got $70,000, my $70,000 is about to be worth $50,000. So I might as well save myself 20 grand. Okay? And that's how you kind of want to look at Google. All right, let's look at what's this, Merck? Let's look at Meta, formerly known as Facebook. 200 week just started to turn down, which is not good. Now, check this out. Facebook, guys, is lower than its pandemic lows. This is March 2018 right here. This is March 2020. Do y'all know we're lower than the March 2008? There was a crisis in 2018 also. It's lower than it's been in 4 years. No, it's 2023. Well, that's December of 2000. So we'll say 3.5 years. No, 4.5 years, I think. 4.5 years. Facebook has dropped from 384 all the way to 129. We're on Facebook right now. A lot of you guys don't own it. The week chart looks flat to up. So there is some issues, but at least I know if it gets a nice little run, this is how my brain works. It can probably get to about $200 from here. Now, $130 stock to 200,000, 200. I want you guys to think of it in big numbers. Like if you ever get confused, just add a couple of zeros. So if this was $130,000, if somebody gave you $130,000 and said, hey, it appreciated to $200,000, you just made 70 grand. That seems like so much more money than 130 to 200. But that's the same thing, right? If it runs from 130 to 200, you make a 50% return. And it never even has to go back to its all-time highs. That's a pretty nice little move. But let's see what the 200-day is doing. The 200-day shows something a little bit different. If I was looking short term of what Facebook can do, let me erase all of this. It looks like Facebook could run, and look at this. It's been bullish, 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 bullish. We dropped to $90. This bad boy is holding this trend. It looks like it wants to go to 150. This is how a trading mind thinks. This is the area where you might want to start getting out. But why, Joel? It's Facebook. They have all these operations going on. The 200 week is going up. I'm thinking like a trader right now. I'm not thinking long term. I'm not thinking that the metaverse is going to come into play and then everybody's going to be part of the metaverse and I'm going to be doing these consults and doing these videos in the metaverse. I'm not thinking 5, 6 years down the line. I'm thinking what's going to happen in the next 3, 6, 9, 12 months. What's realistic? Realistic expectations is that it can get to 150. The week chart says, yeah, it can get to 200, but it's going to take some time to do that. Right? It took a whole year for it to drop from here to here. So you thinking that it's going to get to 200 in 3 months, and there's a lot of you guys out there right now with 3-month options at 250, 300. This is what I'm saying in my consults. And I'm like, you got a $384 option? This is 384 up here. And you think it's going to get there in 3 months. Yeah, because the metaverse is going to take off. And it's like, you sound like my kids are older now. Y'all sound like 9 and 10-year-olds. Like, that's not realistic. Facebook ain't going to 380 in 3 months. You know how much money would have to flow into it? It's a $130 stock. Look at how big Facebook is. When you pull up Facebook is a $300 billion company. You believe that $700 billion is about to run into Facebook in the next 3 months? Yeah, Joe, they're going to ban TikTok. Okay, even if they ban TikTok, and I'm on the bandwagon that they ban it, it still ain't going to get there in 3 months. And if it gets there in 3 months, you lucked up. All right. Sometimes stuff like that happens. Sometimes I'm sitting in something and it run like Tesla. I was in Tesla and it ran so much in like a 4 or 5 month period. I had to sell. Right. But before we get to Tesla, and I show you when you sometimes get lucky by positioning yourself right. Check this out. Facebook has a PE ratio of 12. It's under that 15. It's under that 16 that investors like to look for. Ooh, under 16. $300 billion company. Doesn't offer a dividend. Let me look at the financials. Can they reinvest in their stock? Can they do buybacks? Can they do mergers and acquisitions? Can they go out and buy TikTok if they wanted to? Well, look at their cash flow. $26 billion. They got money. Facebook got money. They got money to spend, to blow. Right? And that's why you're seeing a spike in their stock. And I mean, even from here, from 91 to 130, it sounds like it's not a lot, but 90,000 to 130,000, that's a 40% run. So I hear people all the time decide that they're just not going to buy the market because it's bearish. And I'm like, there's money to be made in this market. That Facebook ran 44% in a bear market. Now, yeah, it lost a bunch of money from here to here. And yeah, it was almost impossible to know that it was going to do this. But even if you had drawn this line and you had gotten in late, you got in somewhere around here, and we sitting at whatever price we at today. Y'all know that's a 16% move. Y'all know that the S&P 500 averages 10 to 12% a year, and you could have made 16% in about 30 days. Stop listening to negative Nancy's tell you about the market. There's money to be made. Y'all know how much money you could have made in the options market on Facebook in one day? In one day. Dang, I gotta add it again. I thought it was here. Hold up. You could have made a 24% return in a day. In about 30 days, you made what, a 16, I forgot the percentage, 14, 15%. You could have come into the options market and made that in a day, right? So I always tell people that even if you were intraday trading it, watch what I do, right? Let's just say you were trading this intraday. That option alone, let's look and see what this option did. If I just went to the option that was the most popular, this one that has 5,500, and I had $440. Now, what I'm doing right now is super advanced. A lot of you guys can't do this. You're looking at an actual option. So that option today, even if I put a resist, even if I looked at the option that everybody was buying and I said, "Hey, I'm going to wait until that option goes down in price." This option this morning was $450. This option at 9:45 when it started to break to the upside. Y'all know that this option was $330 at one point. $330, and now that option is sitting at $430. You could have made in one day, just by using simple tools, simple what would Joel do method, you could be up 30%. So I showed you guys how in Facebook you could have made 17% over a 30-day period, right? Or you could have got in late, drew the trend line, could have made yourself about 12 or 13%. You could have bought it yesterday and woke up today. You could have been up, if you felt like the market was going to go up, you could have been up, what, 20%. You could have come in, you could have come downstairs, you could have come to the trading room, literally waiting until 9:45, looked up and seen if the market was going up or down, and decided, hey, this option has the most volume. This is the one that probably everybody is buying. Let me take a chance, but I'm not going to buy it until it breaks its trend and starts to go up in value. You could have bought this. You could have bought in on this at 10 o'clock, 10 o'clock, and made your $100 for the day. All right. So many different ways you can make money in this market, and you don't have to be bearish and or bullish all the time. You just got to understand, what is your strategy. Is your strategy intraday trading? I can be bearish on Facebook and not own it, and then be trading it intraday. There's so many different ways that you can make money. It's not just one way, but it's almost impossible if you're not using the technicals. Okay, let's look at Merck. Merck's been killing it. Oh, because I'm on the wrong charts. Let's look at Merck. Merck, guys, Merck hit an all-time high today. If you wanted to be buying options, this is where y'all should have been. Merck has been the most bullish, one of the most bullish companies that I've seen thus far. You literally could just buy option calls every single day, and it was going up. Hit here. Look at the 200-day. Clean. When should you have gotten bullish on Merck? Soon as the 200-day started to angle up. But Joel, I don't know when to get in. Somebody was teaching me support and resistance. Did they teach you 200-day moving average? Fired them. Came down here. Let's say you missed it. All you had to do is draw one little line. Bam. It broke it. Went up in price. You knew it was at least going to this resistance area, which is 96. And then this bad boy just kept going. That's what you call a short squeeze. If you're in Merck, why are you getting out? I'm getting out because it's just too high. Get out when the charts tell you to get out. But Joe, I can sell it at 115. I don't want to sell it when it gets to 110. Okay, but if you had just put a trend line here and just said, you know what, when it breaks this trend, I'll get out, you could have been able to ride this from 90 to 100 to 105 to 110 because it's not breaking this trend and it's not going to fall to this 200-day. It can't get to here until it breaks this. It can't get to here until it can't get to here until it breaks this. It's impossible. So stay with it because it could probably go to 130, 140, 150. I don't know. This is those periods where you luck up and make money. Because yeah, it's too high right now. I get it. But as long as my hour chart is showing that it's positive, look at the Ichimoku. It started to go above this Ichimoku way back here on Thursday. It broke this trend and it got above this Ichimoku way back on in October. You could have stayed with this stock the whole time. It broke the trend here. Maybe I would have got out. But this is where it is now. All right. Learn how to trade it. Okay. Why is everybody interested in Merck? Phenomenal company. PE ratio 20, offers a dividend, and it's spiking. 300 billion in size. Financials. Does it have cash flow? Is it cash flow positive? Yeah. And it's increasing. Right? 2019, but then it started to increase 5, then it almost doubled, then it almost doubled again. Okay? That's why people love it. They're going to stay with it until the trend changes. All right? Nvidia. Nvidia. Week week chart up. Stay with it long term, but short term, nasty. Look at this, nasty. You knew when to get out? Joel, I can't believe on every single chart is showing you this. Yeah, it's like a magic show. I make it easy because it is easy. You could have known exactly where to get out to. You could have known if you were bullish where to buy your calls at. You could have known to go into the volume and look to see where everybody else was buying, and you would have noticed that everybody was buying options at the 170 area, no higher than that. That's where all the volume was. That's where we went to. Okay. Now there's going to be some short term pain. Nvidia could drop back to 110. That's where it looks like it wants to go. But if it starts to go up in price, first place is going to be the 167 area. But why is everybody interested in it? Number one semiconductor that's out there. It's 370 billion in size, though. They do offer a small dividend. I don't even know why they offer that. But look at the PE ratio. This is the highest PE ratio we've seen thus far. 39 is ridiculous. Not during a period like this when interest rates, um when you see the feds getting dovish and interest rates are being cut and the dollar is starting to, fall, then you can say, all right, you could put any type of multiple on this company because it's gonna make a whole bunch of money. But that's not the case. As long as interest rates are going up, stocks like this that have high multiples are going to get smashed. They're going to get smashed no matter how you feel about the company. Now it's up 4% today because it's a company with a high beta. 1.72 beta is really really high. So it's going to have moves that go up and go back down really really fast. All right, let's look at Realty. Let's look at O. Well, O has been going down since February of last year. It had periods where it was going sideways, but it's going down. Where do you think it can go to? Look, almost like clockwork, it gets to the 200-day. And this is what's interesting. People be thinking that they draw the 200-day afterwards. Nah, you know where the 200-day is. Way down here, we knew where the 200-day was. Okay. 200-day was way up here on this day. So yeah, we knew the 66 area was where this probably was going to run to. and then it was going to have some issues. The only time it doesn't have issues at the 200 day is if the environment changes. If the environment is bearish and negative, then everybody knows to sell at the 200 day. It's just everybody knows this. If you're buying it long term, because I don't want to beat up the people that are long term, the 200 weeks started to turn down. That ain't good. That ain't good. Good. It's not good. It's not with a 200 week turn down and a 200-day turn down. Now, can everything change? Yes, anything can change within a company. But I'm just trying to think long term. You could have stayed long in this stock from 2009 all the way up until 2020. Then it gave you some issues. It spiked. Now it's giving you some issues again. It looks like it's giving you some issues. But at least if you're going to get in this company, at least it's down from 84 to 64. There's not that big of a 30%. It's got 30% downside, which is the lows of the 2020. So it's smack dab in the middle. It's in the middle of the range. So I understand if you're buying this, long term. I hope that you're in it because it offers a high dividend. Because if not, there's no reason in my mind that you should be in something like this. And sure enough, it offers a 4.7% dividend. $40 billion company. This is where it gets important. What is the cash flow? The cash flow has been increasing. Okay. Not by much, just by a little bit, but it's increasing. So that's good. Okay. I know I beat up the company, but it's got a pretty decent dividend. You're smack dab in the middle. So, but it looks like it's getting challenged with that 200 week starting to angle down. Okay. We looked at the spiders. We looked at Target. Well, we have it, but Target is angled down on the 200 day. 200 week chart is angled up. That means long term, you still want to stick with Target, but short term, it's angled down. Short term angled down means I got to find all the support and resistance areas. Now, I've been loading up on Target. Why? Because I'm a little bit more advanced and I can take a chance. And I saw a support area right here. It hit a support area in June. That's when I bought it first. And then I bought some more. And it looks like it's ranging. It's ranging. Let me try that again. It's ranging between these two prices. I also like this gap. Y'all see this big old gap right here? It's a gap right here. That gap is right at 210. Remember when I told you guys 80% of gaps fill? I believe we fill that gap. But for now, we're in a range. Look at that beautiful range. You could have bought here, sold here, bought here, sold here, bought here. Guess what? Sell here. But if we sell here, if we can get above this 200 day and chill for a while, we're going to spike up really fast to 210 because that's just how it works. If it get to 180 to 190, chances are it's going to 210. That's when you guys should be buying these very, very fast options, these $20 options on something like this. Because if you catch an option in one day on something like a Target got options, guys, that are up. Look at this, 800% in one day. 800%. Y'all see this? That's a real number. Can you imagine being up 800% in one day on an option? And it told you days before which one had the most volume? Even if you had gone a month out. Let's go to January 27. Y'all know those options were up 137% on something like Target. Target. 130% in one day, Joel? Yeah. The stock is up 4%. The options are up 137%. It's crazy, right? Why are people in love with it? Why do I love something like this? Why am I on the bandwagon also? Because during recessionary periods, you want to own stuff like Target, Walmart. Look, they offer a 3% dividend. Beautiful. Now, the PE ratio could be a lot better. I don't really like that 21%. It's kind of high, but it's Target. Financials, is it cash flow positive? And that doesn't mean that you can't buy companies that aren't cash flow positive. It's saying right now they have negative cash flow, but for the most part, they were cash flow positive. Okay. Even during 2022 when they had that terrible, terrible earnings period. All right. Let's go back. Almost done. Tesla. Good old Tesla. All right. Tesla. 200 week angled up. That's a beautiful thing. 200 day though, angled down. Should have known Tesla was going down. You should have known. Look, I got out of my Tesla, all of my shares, like almost a year. I guess I would say about 7 or 8 months ago. I think it was like June or July. I got out of my shares and I saved myself a lot of money. I got out around this 275 area, 250 area because the 200 day started to angle down. I started telling everybody I'm selling all of my Tesla. And Tesla drop, drop, drop. You should not have been surprised on its fall because when the 200 day is angled down, ain't nobody trying to be in it. Now, if it does start to run, quit looking at the all-time highs unless you're thinking about it 5, 6, 7 years down the line. If you're looking for it to go back to its price in 1 year, you're not being realistic. Can it happen? Anything can happen. Look at what happened in 2020. In 2020, look at what Tesla did. This was crazy. This was obscene. Tesla in March dropped. This is the March lows. Tesla dropped down to $30 a share. Tesla then ran, guys, this is April. By June, Tesla ran from $28 to 90. 28 to 90. It ran 300%. Can you imagine making this type of money in 3, 4 months? We were in hog heaven when this was happening. But you had to start thinking to yourself, I'm probably lucking up. Why is this company all of a sudden making all this money? It's the pandemic. Shoot, I placed a couple of orders during the pandemic. That's when I bought my Teslas. Well, I bought one last year. I bought my wife's Tesla in September of this year. Okay. Where y'all think I got the money to buy it? This is where Tesla was. This is when she got her vehicle. Joel was winning. And then this bad boy kept going higher, which is absolutely crazy. And then it dropped from the grace. I mean, it was a trillion. It went from like a $20 billion company to like $1 trillion in like a year. It was ridiculous. It was a ridiculous move. Even I was like, guys, this is ridiculous. All right. But it started to drop. We all knew where it was going to, the 200 day. 200 day was still angled up. That means you still buy it. It's a great stock. It's the greatest company on earth. It's the greatest company on earth. Oh my God. Then he decides to buy Twitter. And then all of a sudden, everybody gets out because they know where is he going to get his money from to buy Twitter? He ain't that liquid. He's going to get it from his Tesla stock. He's gonna, what's the word I'm looking for? He's going to artificially make the stock price go down because he's selling he's selling $40 billion worth of Tesla stock. He artificially put pressure on his own stock. But all the Tesla heads kept, Joel, I heard your story. I want 2 Teslas too. I'm just going to keep doing what you do. And I'm like, guys, I'm out. I love the car. I love it. But I don't love the stock no more. It's terrible. Like, look at it. It's terrible. 200 days started the angle down. I get this. But once the 200 days started to angle down, high beta stocks, you got to run out of these. When you got a stock that's got a like a two, when you got a 2.0, 1.5 beta stock like a Tesla, look at the beta 2.0. That's crazy. That means when it goes up, it goes up. When it goes down, oh, it goes down hard. Doesn't offer a dividend, and it's got a PE ratio higher than 16. Remember, during a period where interest rates are going down and multiples are compressing, investors hate seeing any PE ratios higher than 16. They just do. They just hate it. It's just like a rule book. There's a rule book that says stay away from things that are high beta. So stay away from anything that's a 1.0 or higher in beta. Look for high dividend companies, right? With PE ratios that's low. That's the rule book. And they have to be cash flow positive. Now, Tesla almost Tesla re- oh dang. Oh, what the heck? Sorry about that. Let's try that again. Tesla cash flow positive. Look at this. I mean, it's increasing. So yeah, Tesla got money. Tesla has a lot of money, but Tesla's not reinvesting in their stock, and they have a lot of debt that they got to repay. Okay. So it's struggling right now. It's still the most profitable car company ever, right? And it reached a market cap that I don't think car companies will hit in the next 20 years. Like, it's just crazy how it hit 1.3 trillion in size. Whereas the second largest company on the planet, car company on the planet, Toyota Motors, is only 192 billion in size. I think at its highs it was like 250, maybe even 300. But Tesla was 1.3. Y'all see that? Toyota's largest size was like 300 billion. Tesla was 1.3. It was $1 trillion more than this company. That's ridiculous. And you guys are buying it hands over fist. I get it. The leader of the room owns it. I hype it up. I love the car. But I tell you guys when I like the stock and when I don't like the stock. And Tesla can actually drop. I know a lot of negative folks are like, and even I got a little bit too negative. But when you look at the chart and you see where it can go to, it gets kind of scary because these are the COVID lows. The COVID lows, guys, is $25. So you want to know why Noble put out that $25 price? This is why. Because Tesla was at 21, $22 at the bottom of COVID. And look at where it's at right now. Does it look like it wants to go back to its highs, or does it look like it wants to go to 21? It looks closer to 21 than anything. Now, I think that there is some support at 75. Look, I bought my kids some Tesla stock 2 days ago. All right. So there is some support here. And then there's some support here. And there's some support at the fact that Toyota is 200 billion. Because if Tesla's at 300 billion right now, and Toyota's at 200 billion, and Tesla is it well, let's look at that. Let's look at the cash flow. Toyota has a 3% dividend. Let's look at its cash flow. It's got negative cash flow. So, you know, if this is the second largest company out there and Tesla's sitting at 300 billion, what's going to happen is if it gets to the size of Toyota, they're going to say Tesla's a better company. So why, so it has support at about 30, in my opinion, if I was appraising this stock, it has support about 30% from where we are right now. and that takes you, if we're at 113 right now, you figure one third of that is $33. So $33 minus 130 is going to put you right around $80, right? So 75 to $80 is going to be your next support area, and that puts it at the same price as Toyota. You see how I broke that down using comps of other companies? This is how investors think. Now, I have people come into the room all the time and be like, Joel, that's just not how it works. And I'm like, well, show me your bank account, because this is what I've been doing. All right. And this is what a lot of other people that I've seen invest in the market, this is what they're doing. All right. Because the investing side of the market is totally different from the operations of the company. We want to see where it can go to, which is why at one particular time, Amazon, Microsoft, Apple, Google were all $1 trillion companies, even though they all had different amounts of money that they were making, because the appraising side was these mega these mega companies that are out, these mega cap companies that are out there. $1 trillion was the cap, and then the next cap was 2 trillion. Anything higher than that was ridiculous. I'm not going to overpay for a company that's $1 trillion. That's why Bitcoin hit $1 trillion. Y'all know Bitcoin hit like $1 trillion almost exactly, right around that 55, 60 area. And that's why it turned, because it was like, we hit $1 trillion. We hit the market cap that we were going to. Now it's going to chill for a while, and then it'll probably get back to where it wants to later. Did y'all know y'all can check the market cap of Bitcoin just by typing Bitcoin and then looking at the market cap? The market cap is 300 billion. What's 300? If I divided a trillion by 300 billion, that's 3 times the amount that we are right now, right? So 3 times this amount is going to give you $1 trillion, right? Well, 3 times this 16 is going to give you right around what? $48,000-$50,000. Why do y'all think Joel Harrison sold all of his Bitcoin at $50,000? And I come into the room all the time. I'm like, I sold it at 50,000. I sold it at 50,000. I sold it at 50,000. It's probably going down, because 50,000 meant that this was $1 trillion. And I know how investors think, because I'm part of that 1% crew. I understand what investors are doing and what numbers are realistic and what numbers aren't realistic. How did I come up with this number? Right? Why did I come up with the 18,000 number? I looked at the market. I knew that Bitcoin can drop 60 or 70% every year. I did the calculations in my head. I put out there, guys, I think Bitcoin's probably, after I got out at 50, I said, I'm going to re-enter it right around $18,000. Y'all told me that I was crazy, because y'all weren't using charts. You weren't using numbers. You weren't using comps. And that's what separates me from pretty much everybody that's out there. I'm trying to teach you guys how to do this for free. All right, let's look at Walmart. Walmart, it's up. Y'all see that? Bias is up. See that bias? It's up. 200 day, slightly down, going sideways. All right, but it's been going sideways for a long time. I like that. I like this. It's challenging the market. It's like, look, I'm going to range between this price and this price. This is what I love about stocks like this, because now you can see the range. That's the range. And sometimes it overshoots that range, and sometimes it undershoots that range. But pretty much Walmart is probably going to stay between 127 and 150. You options traders, it's telling you the range to buy it here. This is the only time I tell you guys a 200 day might not have to be in question, because if you see a range like this resistance area and this support, you can overshoot it and try to get to the upside. Okay. But look at where it stopped. It didn't go back to the highs, even though it could have, but it just hit this range and then it reversed. It was almost like magic. It was magic. Once it established this resistance right here, you knew there was going to be resistance. There was going to be resistance. This was going to be resistance, even though it overshot it. And this was going to be resistance. It gave you 5 opportunities to freaking buy. Look, money made, money made, money made, money made on a stock that everybody loves. And it's interesting to me that a lot of you guys are struggling out there, and you could be making a killing on these simple little boring companies that are out there, it offers a 1.5% dividend. Its PE ratio is kind of high, even though I believe its multiple is less than. I don't know why it's so high, but it's at 45 right now. This is what's going to make y'all mad. Walmart's up 2.5%. Not in the options market. Options market, y'all know that in one freaking day, you could have made a 1,400. That's a real number that you're looking at. A 1,400% return in Walmart. 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 Right? How would you have known this 146? Joel, I don't see the 146 in the charts. You don't see the 146 in the charts, but what you should have been doing if you had taken my little $75 class, you would have been able to pull up the volume and you would have seen where everybody, if you were going to buy calls, where everybody was buying calls at. Now, this particular one is 1,400 had the least amount. But let's say you were buying this one that had 1,400, 300% return, right? At the 144, at the 143 strike. And I had people coming to me in my DMs showing me what we call unusual options activity. Unusual options activity is when you start seeing the volume. Now, the only reason why I didn't pick it was because the volume over here was just as high as the volume over here. All right. But if I was going to buy a call, it was going to be the 143 strike. Even if I had gone out 2 weeks, I would have gone to the 143 strike. Even if I had gone a week out, guys, I would have been up 100% return. Even if I had gone 2 weeks out at the 143 strike, I would have been up 80%. Even if I would have gone out 3 weeks, if I had bought the 143 strike, I would have been up 59%. All right. That's still a ridiculous amount of money to be made on a Walmart in freaking a day. Okay. Money can be made. Stop going out there and buying all these penny stocks and all these stocks. Y'all have no clue what they do, and start learning how to trade these large mega cap companies, because this is where the money is being made. It's easy to figure out what they're going to do. When you're trading companies that you've never heard of, I don't know what it can do. But Walmart is huge. Everybody's trading it, everybody's investing in it. All right. Let's look at the financials real quick. Oh, we're already there. The cash flow. Cash flow positive. And it was up then down, then up then down. I get that, right? And that's why that's what you see in the charts too. You see it up and down and up and down. But for long term, it's a solid play, guys. It's Walmart, and y'all will not invest in it. And I don't understand why. All right. It's been in my core position forever. I sell it every now and then. Like when the market turns around and the stocks get really really bullish. If Walmart is already at its all-time highs, I'll take my money out and buy something else that's got a higher beta. All right, let's look at oil. Let's look at the XLE, which is, somebody gave me XLE. XLE is the energy sector. The energy sector has been bullish ever since January of last year. If you didn't know this, you don't know how to trade. This was the easiest money to be made all year long. You literally just had to draw a trend line. Look, break the trend, made money. Break the trend, made money. Break the trend, made money to the upside. Break the trend. Okay. Started to go down. We knew where it was going down to. Where, guys? The 200-day moving average. It's like a magic show. Joe, how come all your charts look easy and mine don't? I don't know. It hit the 200-day perfectly right there. This is dumb easy, people. It's easy. It's easy when you know what to look for. Look at this. Like, how much easier can that be? I don't need 50. I got the Elliott waves and I got this on there. And then I got the like, you got all of these freaking indicators on there. And it's like, y'all haven't learned price action. If you don't know price action and the fundamentals, how you even going to be able to use that indicator? All right. So XOM. Naturally, XOM also largest oil company that's out there. Very easy way to trade it. Even if you had waited months and said, "Well, I'll just take a chance when it hit the 200-day, Joel." Easy money. Very easy when this is happening, right? But where you guys have issues is when the 200-day starts to angle down, right? Cuz y'all come to me all the time. I told you, Joel, I was going to make a whole bunch of money on my Carnival Cruise. It's up 3% today. Okay, big timer. Where is Carnival Cruise going to? $1 million question. It's going to maybe $9 a share. That's where we at right now. No, I'm sorry, $11 a share. Joe, why you just hating on Carnival Cruise? I'm not hating on Carnival Cruise. Carnival Cruise does all the hating on its own. This is Carnival Cruise's chart. This is the number one stock y'all come to me with, which is why most of y'all don't make money. This is the number one stock I get in my consultations. I don't know why everybody want to buy Carnival Cruise. I guess it's like, I guess emotionally you're like, all right, once the market opens up, everybody's gonna go there. They're talking about raising prices. I don't know why this is such a beloved stock when it's like the most terrible. It has the most terrible charts that I've ever seen, and y'all love this stock. The 200-day, the 200-week has been going down since 2019. Y'all heard what I just said? From 2019 till now. Now I get it. If you're a trader, we're going to separate that. If you're investing in this thing, you don't know how to invest. But Joel, it's only $9 a share. You know how many shares I can buy? I can buy 1,000 shares. And if it goes from $9 to 900, then I'm going to make all this money. It's only $9, Joel. You know how many shares I can buy? You're thinking like a fourth grader. All right. But it was $60 and then it dropped to 9. Look at how much it dropped. Because it's a terrible company. It's terrible to replay. Stop buying this long term. It's terrible. It's telling you that it's terrible. It's been terrible for it was terrible before COVID. Doesn't mean that you can't make money on it. But how are you going to make money on this? Because a lot of you guys are approaching it the wrong way. Investing wise, you should have stayed away. Unless you're going to invest it to the 200-day. So as this stock, this terrible stock, started to drop in 2019, what did y'all say? Well, it's probably going to get back to its 200-day at least one time during the year. So if you bought it right here, you lucked up. You lucked up, but you should have got out here. And if you bought it down here, and it started to go up, you lucked up, but you should have sold it right there. If you bought it right here, you lucked up and you should have sold it when it got there. If you bought it here, you lucked up and you should have sold it when it got there. If you bought it here, you should have sold it when it got here because you lucked up. But then the 200-day started to turn around. What year is this? 2021. Last year, it started to turn around. The 200-day. This is still terrible. No way in heck I'm putting this in my kids' account. No way on earth I'm going to put this in. My kids will be 40 years old. It'll probably still be going down. But doesn't mean that you can't make quick money on it. So from 2021, I can see why some of you would have bought it here. It would have been the right thing to do. Joel, you told me to buy it at the 200-day. Why is it not going up? Because this bad boys ain't go down. And guess what? It's a short selling play. Where people are making money is shorting it, not going long. If you bought it right here, you lucked up when it got to the 200-day. If you bought it right here, you lucked up when it got to the 200-day. If you bought it right now, you're going to luck up when it gets here. I'm telling y'all right now where to get out. Please get out at 11. Please. I've been saying this for 3, 4, 5 years. And nobody wants to listen. This is the number one stock y'all come to me with. This in y'all long-term portfolios. And then a lot of you guys are on 30, 30 or 40% of your portfolios will be in this terrible stock. I said I wasn't gonna rant today, but I've seen this stock has destroyed more wealth than any that I've seen. And all you had to do was pull up a freaking chart. That's all you had to do. All right. All right. Let me get to you guys' stocks. I know I'm over. I said I'm gonna get to everybody's stock, and I am. Watch. All right, cool. So let's go over here. Spent a lot of time today. Y'all know that I'm fasting, so I don't have the same type of energy. So I'm running a little slow. We looked at Target and O. Someone said, hey, let's look at the Hyatt Hotel. Symbol is H. Let's go ahead and look at it. Intraday options. All right, H, Hyatt Hotels. Look at this, guys. 200-day looks really, really good. Let's look at the financials real quick. Hyatt Hotels. Pull up the financials. Oops, that's H. H not popping up. All right, Hyatt Hotels. 79 PE ratio. Really don't like that PE ratio, but it's Hyatt Hotels, right? 5 years, it's been the same price pretty much for the last 5 years. So it better offer a big old dividend, and it doesn't. I don't understand why anybody's in this. It hasn't done nothing for 5 years. Nothing. It's done nothing for 5 years, and it doesn't offer a dividend. Why are you in this stock? All right. I know you love Hyatt Hotels. You understand it. I'd rather be in something like an Airbnb, but to each their own. But if you wanted to buy it, the 200-day is angled up. The bias to the upside is up. So if you're going to buy this realistically, where can it go to? It can get to this 108 area, but it looks like it's ranging. It's ranging between this price and this price. So this is the lower end. This is the higher end. All right, look at that beautiful range. All right. Looks like the 110 area is where people are selling it. Looks like everybody's buying it at the 75 area. All right. So every time it gets to 100, you know where it's going. That's where you probably want to get out at. Okay. Yeah, it's at the 200-day, but this is different. It's ranging in between that 200-day. All right. So if you were doing intraday options, though, intraday options. So let's say I was buying it today. All right. Intraday means I'm buying it today. I would have woken up this morning. This is how I would have traded this, guys. Watch this. I know nothing about options. Before we even look at this option, before we even look at and see what it did today, the very first thing I'm going to look for is it has to be above the Ichimoku. I'm going to look for the most volume. All right. So if I was intraday trading this, I'm going to pull up. First of all, I'm going to pull up an hour chart just to see what the bias is. The bias has been down, so there's no way I would have been up today. So I just want to throw that out there. The trade on Hilton Hotel, Hyatt Hotels should have been a short from December 15th all the way until now. It just got bullish in the last day. So if you're bullish on this, we're above the Ichimoku. I'm going to take trades to the upside. All right. Because we just got above this and you can get a 7 to 14-day run. So if I was trading this today, I'm going to trade it to the upside, but it has to be above the Ichimoku. I'm going to go over here. I'm going to look and see what the ATR is. The ATR of Hyatt Hotels is going to be $2.50. That means if you're trading this, the most you can probably get is $2.50, right? So when I pull up this chart, I'm already thinking $2.50, $2.50, $2.50, $2.50, $2.50. So this morning, I would have gotten up, and the very first thing I would have been thinking was $2.50, $2.50, $2.50. That's all I could make. $2.50, $2.50. So I would have woken up this morning. I would have looked and see where the market was. I think right around 9:30. This is what you saw. So you saw it drop. You start seeing it go up. What did I tell you to think about? $2.50, $2.50, $2.50, because that's the ATR, right? So if I was looking for $2.50, that should take you right around the 92.50 plus $2.50 is 94. 95, actually. 92.50 plus 250 is 95. You should have known to get out at 95. 95 or somewhere near 95. Well, we got all the way to 94.6. If y'all didn't know where the stock was going to, then you don't know how to day trade. You ain't going to day trade with me or with my money or any of my clients' money because you have no idea where it's going to. Once it got to 94.50, 95, you should have known to get out. Why? Because that's the maximum ATR. What does this number up here say, guys? $2.50. What does this number over here say? ATR. What does this number say? $2.50. 250, 250, 250, 250. It matches. You should have been out of the stock. Why do you guys not know how to do this? I have no idea how y'all are day trading. You don't know where it can go to, how much it can go. Don't even know what average true range is, trading off other indicators that don't make any sense on why this thing is moving fundamentally. And I see y'all do this every day and struggle trading. Y'all see how I just woke up? I don't know nothing about this stock. I knew at 9:30 what direction I was going and how far I was going to go before I even hit the buy button. All right, $1 million worth of information I'm giving to you guys for free. All right. Someone asked for Apple 10-day options. All right, so let's say you was trading Apple. If I'm going to trade 10-day options, does ATR matter? No. ATR has nothing to do with a 10-day option. So if I'm looking at a 10-day option, that means I need to see if it's bullish or bearish right now. So if I was trading Apple, I'll pull up Apple on an hour chart. If we're above the Ichimoku, I'm going to be bullish. If we're below it, I'm going to go bearish. So if I was trading Apple right now, very easy. What is this chart telling y'all? It's telling y'all, why the hell y'all trading to the upside? Now, here's the thing. When you learn the what would Joe do method, you're going to learn the 7 to 14 day options, that stock swings 7 to 14 days. If you didn't know that stock swings 7 to 14 days, you don't know how to swing trade. Stocks don't usually go up for a day. They'll go up, or they'll have a bullish period for about 7 to 14 days. So when it starts to get bullish, you can be in 3 days late and still make money because stocks usually run 7 to 14 days. Now, here's the thing. When the market is bearish overall, the days are longer. So you might get 7 to 21 days to the downside. And then if you're trading it to the upside, if you're in a bear market, you can't just say 7 to 14 days. It's probably going to be like 3 to 4 because the market is super bearish. So if you're trading Apple to the upside, the most amount of days you probably, like, even if you look at a chart, Apple only has been bullish like 3 or 4 days in a row, and then it'll go down for 7 to 14 days. You can see it on your charts. It's like clear as day. 7 to 14 down, 2 or 3 days up. 7 to 14 days down, 2 to 3 days up. 7 to 14 days down, 2 to 3 days up. You won't notice if you don't look at a chart. So this chart says that this is bearish. But what some people do is they'll say, all right, we went bearish on this date, which was 12/14. It's now January the 6th. That means Apple was bearish for 3 weeks. If the market on average goes in periods of times where it's bearish or bullish 7 to 14 days, it's probably near a period where this is about to end and then it's going to be bullish for 7 to 10 days, right? But Joel's not going to take this trade unless I go to the options market. The only way I'm going to take a bullish trade is usually we got to be above this Ichimoku. We ain't there yet. And remember, I can come in 2 or 3 days late, and I promise you I will trade better than you did buying it down here. Because first of all, even if you bought it here, you lucked up. And then you didn't even know that it was going to run 14 days. I can get in 3 days later because I'm using charts. I kind of have an idea of where I want to get out at. So where you might get out early, even though you got a lower price, because I'm going to wait until everything lines up. I can get a 7 to 14 day push, but we're in a bear market. So I can't expect to get 14 days out of Apple on a bullish run. The most I'm probably going to get is 3 to 7 days. And that's where a lot of you guys been going wrong. In a bear market, you're only going to get 3 to 7 days to the upside, even on a stock like Apple. And if you get more than that, that's gravy. You lucked up. But the only way I'm going to take this trade is if I go to the options market, and if I go 14 days out, I better see more calls than puts. So if I go to February, or wait, it's January the 6th. If I go to January 27th, And I don't see more options volume over here on the call side than the put side. And it looks like the put side and the call side have about the same. You could take that, even though y'all see this volume, there's 25,000 contracts puts being bought at the 110 strike. This options chart is telling me that this is bearish, not bullish. And that's where a lot of you guys go wrong. You feel like, oh, it feels like it's turning around. It feels like it's going to go up. That's not what the options market is saying. The options market is saying this is bearish. Joel said this is bearish. You could have been bearish for 15 days. This is the direction you should have been trading in, not this way. You don't want to, when you're trading, guys, you don't want to be the black sheep. I keep telling people that. Like, when you're investing, you can buy low, sell high. That's not how trading works. Trading, you want to go with the momentum. If the momentum is down, you want to be going down. When the momentum is up, you want to be going up. But you got to know when that momentum is real and when that momentum isn't. Stocks are not really ready to run 21 days, 30 days like they were doing back in 2020, because we're not in that environment. You're only going to get small little rips, and then it's going to sell off, sell off. There will be a period where the market's going to run again to the upside. It's just not there yet. And this might be the day that it does it. And you say, well, Joel, I bought it here and I missed out on all this money. You are wrong. You are terrible. Don't teach anybody anything else. Anything can happen. But I promise you, if you continue to do that same thing over and over again, consistently, you're not going to win as much as you're not going to win as much as you lose, or you're going to lose more than you win. All right. Good one, because everybody's looking at Apple. Long-term investment hold for GD. All right. What is GD? Dang it. General Dynamics. All right. General Dynamics. Let's look at the General Dynamics has a bullish chart. That's a good sign. You overlap the candles, and that's what you see. But Joel, look at how high it is now. Okay, wait. It's gonna revisit. If you're buying this long term and it's bullish, then wait until it revisits its 200-day moving average. It's gonna get there, people. It's gonna get there. You just gotta be patient, just like these people were. They were patient. They were patient. They were patient. Be patient. It's gonna get to here. Be patient. And even if it goes higher, way up here off the chart, it's going to come back to this 200-day. Have faith in it. Okay. All right. We looked at Microsoft. We didn't look at AMD. Let's check out AMD. I'll leave soon because I need to go golf. AMD charts 200-day is down. Week chart 200-day is up. So long term, AMD is still a good play long term, right? AMD is a semiconductor company. All right. But what is this 200-day saying? It's telling you there's more down days than up days for now. It's terrible. When did AMD start going down? In May, June, July, August, September, October, November, December. You should have known this. January. If you get into a nice little rip of AMD, where is it going to? 82. 82. That's where it's going. Can you ride it longer? Yeah, it depends on the strategy that you're using. Okay. All right. Someone said, not sure if I set it up right. Dawn, I know a lot of y'all been on here for a while. Sorry about that. Dawn said, hi, Joel. I need a few strong dividend producing stocks. I showed a couple today for the long term to recommend for my college age son to build long term wealth. For instance, Yahoo had recent recommendations for 11 best high dividend stocks under 100. UHT, UVV, and PM. Do you have any other recommendations? Of course, I like well, let's look at UHT. I don't really get into the dividend stocks per se. The Universal Health Core, I'm not really loving right now, but let's look at it long term. See, I would take UHT off the list. All right. Add something like a Target or a Walmart. All right. I love Universal Health Realty, but for now, the bias is down. You see how everybody's selling it? Now, if it can get above here and it comes down, I want you to start adding it to the portfolio. Let's look at C, which is Citigroup. It's a bank. All right. Citigroup, same thing. Now it's funny that they recommended all of these stocks, but their charts look like this. All right. Let's see what long term. Now, long term, it's been going flat since 2013. It's not really making that big of a move. You look at it on the day chart, and it looks like, it's got some support in this area down here. All right. When you look up Citigroup and UHT has a 6% dividend. But remember, guys, sometimes that's how they get you. I kind of like the Fords, right? The beta is kind of low, but you want to make sure that it's cash flow heavy, right? So you pull up the financials, you pull up the cash flow, and you see that it's got cash to do some things, not like other companies, but I can see why. Citigroup is a universal bank. Oops, why did crude oil pop up? Come on, shitter. Citigroup, $92 billion in size, 4% dividend. I love that PE ratio, 6. All right. Let's look at the financials. Negative cash flow, not really filling Citibank. I don't know. I don't like these two so far. But if you were trading Citigroup, it does look like it's bottoming. It looks like between 40 and 48. It doesn't look like it wants to drop lower than that. I understand why people are buying banks too, because the higher interest rates go, the more money the banks are going to pay out. But if I was to buy a bank, I'm going to buy something like a Wells Fargo or a Bank of America. All right. Because look at the Bank of America chart. Looks similar to Citigroup, but there's some more upside to it, right? 34 to 50. Also has a decent dividend. Let's look at Wells Fargo. Wells Fargo, 3% dividend. Because I don't want you guys to get caught up in the dividend. Don't go with the one with the higher dividend. Go with the one with the better chart that has a dividend. Okay. Wells Fargo also been going down. But these banks, PE ratio around 11. Solid companies, but I think they're better. I rather be in something like a I'd rather be in something like a Home Depot or you see Wells Fargo, same thing, right? Even the highs were at 65, so you got 50% upside, you know. Let's look at UVV. I'll look at these quick because you put so many. Universal Core, decent 200-day. Week charts angled down. Y'all know I don't like that. It's been going sideways. I mean, it's a nice dividend, but this is my thing. When you're investing for your kids, I believe you should go hard or go home, because you have time for that stock to do its thing. Dividend stocks, in my opinion, are for when you get a little bit older. I like to put stuff like this is what I've been buying my kids. I've been buying them Disney, right? I know Disney chart looks terrible to replay. I get that. But I want to buy stuff that, and I mean the charts do look kind of bad, right? But it's Disney, right? They also offer a dividend. It's Disney. It's down like 60%. And it's one of my favorites. Oh, no dividend anymore? Ooh. But I don't know. I like Disney. I don't really put but if you're gonna go the dividend route, because I don't want to tell people what not to do. Philip Morris, cigarette company, 5% dividend. Chart looks decent. up 3% today. Week chart starting to angle up. Y'all know during recessionary periods, alcohol and cigarettes go up. That's a real stat. 200-day is starting to angle up. I think out of all the ones you showed me, this is probably the better one. Even though I don't know if you want to put cigarettes in your kids' account, but those are some good stocks, Don. All right, where's your futures and it's separated from your beginners class? My futures video is on my PayHip. If you go to payhip.com/, what would Joel do, you'll see my futures video there. If you can't find it, hit me, just DM me, and I'll show you. I'll send you a link for that futures class. Somebody said, "Happy New Year, player." What's up, Key? All right, you want me to look at AbbVie? Y'all know I must love y'all since I'm over. I'm going on 2.5 hours. All right, very good chart. Y'all see this chart? 200-day is up. Wait until it touches the 200-day. Week chart, bias is up. Very good company. Let's look at his financials. $295 billion, 22 ratio. Hey, this is one that you should add in that portfolio. 3.6% dividend. All right, really nice chart. This one looks really, really good. I like Merck. I like companies like this. If you want to find information about that company, when you go to Yahoo Finance, look at all these different articles you can read about that particular company. But that one looks solid. How about MS? Another bank, Morgan Stanley. The bank's charts are going to all look about the same. PE ratio is under 16, which is good, 150 billion in size. It offers a 3.5% dividend. So Morgan Stanley looks really, really good. Let's look at this chart though. So out of all the banks we looked at, this looks better than Bank of America, Citigroup. This looked like the better bank. Okay. So Don, you might want to add this one. Did you misspeak, bro? Isn't 200 week like 3.8 years? 200 weeks. Oh yeah, you're right. Because there's 50 weeks in a year. You're definitely right. And on the 200-day moving average is half. But I think I was talking about the 200-day moving average at the time. 200. There's a 200-day and a 200-week. So maybe I misspoke, maybe I didn't, but I do go between the 200-week chart and the 200-day chart a lot. Noble said, "Yo, what's up, cuz?" I'm not sure if he's still here because I've been on for a very long time. Testing 1, 2, 3. Happy 2023. You want to? All right. Mike wants to look at MPW. Medical properties. 200 week is starting to angle down. Don't like that. 200-day angled down. I don't like that. All right. If you're in it for a trade, if you're in it for a trade, if you're in medical properties for a trade, you know where it's going to 15. If I was looking at options, better have 15. Better be where all the volume is. 15 is not where all the volume is. Well, that is for today. But if I was going a couple of weeks out, if I was going out to February, I better see 15, and I don't. I see 12. I don't really see that much volume. This is where I see all the volume and open interest on the short side. So I would be careful with that one. All right. And Vici. Vidi Vici. All right, Vici Properties, 200-day looks good. Everybody knows where to get in, or if you're shorting it, you know where to get out. If you're going long, you know where to get in. 200-day, 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 200-day. The week chart, bias is up. That's what you want to see. So when you're buying something like this, you know the better entries are going to be here. If it drops from here, it's probably coming down to the $29 range. All right. If you were investing in something like Vici, you were investing in Vici, PE ratio is kind of high, 5% dividend. That's crazy. But you can read about Vici. It looks like a real estate play. 5-year chart looks solid. Financials probably are solid. So out of the two that you gave me, Mike, this is the better one. Look, their cash flow is increasing. That's a good sign. So I definitely would buy that one. Don said, much appreciated. Wow, you stayed on that long? Good job. All right, guys, that was everybody's stock. I'm gonna go ahead and get on out of here. Go swing my golf clubs. Keep drinking this lemonade. I'm on the lemonade diet, the master cleanse. Y'all know I actually dropped like 10 pounds in like 2 days. I know you can see it in my face. Anyway, so I'm coming to you guys from Decatur, where it's greater. Uh, Definitely, if you're interested in any of my courses, you can always go to my PayHip. My PayHip is payhip.com/what would Joe do. You can also go to like I said, if you get access to all of these particular videos, if you go through the app and you do the monthly service, which is $50, you get access to everything. And why not get access to everything, right? I know people that pay the $50, they learn everything they can in 30 days and then they cancel. I don't care, right? I want you to get that information so that you can trade like the guru. So I'm coming to you guys from Decatur, where it's greater. I'm out of here. Peace.